on Instagram actually.
For real?
Yeah, let's see what her name is. I can't pull up my phone on here if I show you, because I was looking at it. I was like, I was wondering who it was, and then I looked at their bio.
Hmm.
Jordan Lux. You ever heard of Jordan Lux?
No, but she should be able to pay for that yearly subscription.
For real. Oh
And
man.
pay no chargeback either.
You gotta pick it up. All right, man. Looks like the YouTube's not working. It's fine. I'll go over. We'll still have a live room. It doesn't matter. It just won't be recorded this time, but it's fine. Let me just put that in the Telegram just so that everyone knows, and people don't miss out on this. Attention team. This today's live stream will not be recorded. If you have any questions or session. For this everything real quick. All right, guys, looks like we're ready to go. So we have one question from Mike. Mike's asking, I was wondering about the US 30 trades that you sent out during the New York breakout. First, I wanted to know the time, and lastly, I wanted to know just for my confirmation, how do you go about judging if it's a good buy or sell? Like, is there news or something that can be looked at? So Michael, every daily entry that I call is using the K2 daily strategy. I'm assuming you're new here because we've been using that every day for like the past, I don't know how many months. How long have you been using it, Aaron? Since May?
This is me.
Yeah, so if you're new here, Mike, we have the actual results for that. So whenever I call those trades, let's see, I'll just search it up right here. Results. All right, so our indices results, these are just taking that daily US 30 during New York session. We just started taking the Asia session and London session recently, but these are the results for this year so far. We have about 36 wins, 8 losses. The market started acting a little weird around July, so this is the only time we really had losses. If you look at May, we had 14 wins, 2 losses for 26,000 pips. June, we had 9 wins, 2 losses for 9,500 pips. And then this month for June, July, we had 13 wins and 6 losses. So pretty much, the bulk of our losses came from this month. And that's because of a lot of the news that's been going on lately. And we just kind of took more risk because, we were doing so well in May and June that we kind of just let things flow. And then we started adding on other entries from Asia and London. If we didn't take those trades, we probably would have had less losses. Also, we were trading during news. Generally, I'm really strict about trading during news, but we were doing so well last 2 months or last 3 months that, we decided to take more risk and we ended up, biting it a little bit. So generally, we don't trade during news, but I'll show you how the strategy works. It's super simple. So pretty much the way that it works is we use if you're not familiar with the K2 indicators, pretty much these vertical lines on the chart, these are demonstrating swings in momentum. So this is the K2 algorithm that I developed and produced. This is not something that you can find anywhere else that can detect momentum swings like this. There's a lot of people that try to copy it, but most of their indicators are based on like moving averages. The difference between my indicator and theirs is that mine's proprietary and it's not just moving averages. They're mixed with momentum. And it's some sort of code that I developed over my time trading. I've been trading for about 10 years now, so this is basically this is how I see the chart without the indicator. Like I can see all this stuff on the chart without the indicator, but the thing is I created this indicator so that everyone else can see what I see on the chart. So basically how the strategy works is, we'll go here to the text. This is going to be the daily K2 US 30 strategy. And it's real simple. Like, so for one, we look for entries after the New York Stock Exchange open, which is going to be 6:30 our time, which is Pacific Daylight Savings Time. Depending on where you're located, that's when we start looking for trades. That's when the stock market opens. Next, we take the first valid K2 signal, and I'll explain that right now. And lastly, generally we usually put the stop loss at the previous swing, and we trade at a 1-to-1 risk reward ratio. But now we've just been doing set stop loss, TP 1500 pips away, full TP. TP1 is 750 pips. Oh, so this is gonna vary too. So depending on how experienced you are trading, generally I put TP1 halfway from full TP, but if the market's not really moving that fast, like how it's been the past couple of weeks due to low volatility since we're trading in the summer, you got to add another TP because you need to adjust your risk according to how the market's moving. But if the market's moving normally, it's moving fast like it was doing today and yesterday, you can just use 2 TPs. TP1's 50%, full TP is 15 pips, 1500 pips away. And the thing is with the TP1, a lot of people, they use TP1 as an actual target. For us, it's not a target. For TP1, that just reminds you to move your stop loss. So once price reaches TP1, we move our stop loss to TP1. We don't put that as our profit target. We never aim to, we never aim low. We shoot for the stars, and as price shoots up, then we move our stop loss and profit so that if price was to reverse or turn around for whatever reason, you at least lock in those profits. So you guarantee profits, you minimize your risk, maximize your profits. So let's go over today's trade. So what I'm going to do is I'm going to replay time at 6:30. So 6:30 was right here, and then I'm just going to mark it up so that you can see what I'm doing here. So I'll put a vertical line right here, 6:30. So this is when the market opened. So we're not taking any trades before then. We're only taking the trades that happen after this. And for the second requirement, a valid K2 signal would be a signal that is, it would have to match the signal. So if we get a sell signal like this, a red vertical line, it'd have to have a red bearish candle inside for it to confirm that it's a momentum swing downwards or a valid sell signal. As you can see right here, it's a valid sell signal and it comes down. For example, a buy signal would be something like this. It would be a buy signal with a green bullish candle. So if you see that, you can see the momentum swung upwards. You can see here that it doesn't always move in that direction. The way that you determine which direction to trade is obviously in the direction of the trend, because you want to trade in the direction of the trend. The way that we determine the direction of trend is we use the K2 pivots or the K2 trend meter. So if you have access to the K2 indicators, down here is another indicator that I developed, which is the K2 trend meter. This will show you the overall trend on 4 different time frames. You can see right here, we have it set to the 30-minute, 1 hour, 2 hour, 4 hour. So those are the intraday settings. So if you want to see how the market's moving for the day, these are the perfect settings. So you can see right here, the trend meter is red, price went straight down. You can see right here, the trend meter is blue. When the trend meter is blue, this indicates that that the trend is indecisive or it's in consolidation. So you can see right here, it's blue. Price is pretty much just moving sideways. It's not really moving directional very much. But like I mentioned, the trend meter it will demonstrate the overall trend. So this is going to be the trend on those 4 time frames. It's not just the 10-minute. Well, I don't even have it set to the 10-minute. So it's actually a 30-minute, 60-minute, 1 hour and 2 hour. So if you go back further, you can see right here, it's green. You see the market's trending upwards. So it's trending up for the day. Again, right here. You can use that to determine the trend. But for this specific strategy, you don't need that indicator. I'm just showing you, how we determine the direction of the trend. Another way to determine the trend is you can use the K2 pivots. So the K2 pivots indicator is this indicator right here. Basically, when price is below the K2 pivots and the pivots are angling in the same direction, plus they're spread out like they are right here, you can easily tell that price is trending down just by looking at it. So in this situation right here, you wouldn't take a buy, obviously, because price is trending down so heavily. If you took a buy, that'd be a bad decision because look, check this out. If you took this buy right here, you would have got, it would have pushed up a little bit and it would have came shooting down. So, you tie 1 and 1 together and, you got a strategy right there. This would be the K2 pivot strategy. I could probably go over this a little later, but for the most part, it's not used for this specific strategy because this strategy is based on momentum. So the way that the strategy works is pretty much what we're doing is we're waiting for the stock exchange to open. Once the stock exchange opens, we want to take the first momentum candle because the first momentum candle is going to give you the direction of price. So if we get a, we get a buy signal here, after the stock market open, price is going to shoot up because generally if momentum is swinging that direction, it's going to continue in that direction for the rest of the day. Or if we get a sell signal, then it's going to continue in that direction. So it just really depends on what signal we get. But we take the first one because once you get that first signal, it's going to give you the heads up that, hey, price is going to move in this direction for the rest of that session. So let's go and look. So first of all, we're going to look for entries after the New York Stock Exchange open, which is, sorry, it's not 6:30 a.m. Yeah, so 6:30 a.m. Pacific Daylight Savings Time. And that's where I have it marked right here. First requirement's met. We're going to start looking for a momentum candle. So you can see right here, price is going down super heavy. So if price is going down super heavy like that, you're not going to want to take a trade in the opposite direction. But if you're following the strategy right here, we say to take the first valid K2 signal no matter what. So right here, we got a buy signal. First requirement's met. We started looking for entries after the New York Stock Exchange open, which was right here. Second requirement, take the first valid K2 signal. Right here, we have a valid buy signal, right? And it's valid because we have a buy signal with a green bullish candle. So after those two requirements are met, you can enter on the open of the following candle. So I'll change this requirement right here. We'll change this to 4. And then for number 3, you just enter on open of following candle. So it's real simple, guys. It's there's literally no brain work in here. Like literally, you just look for the first candle after the stock market open, and then you take the first valid signal. It's not rocket science. Literally, you just wait for a green candle that's valid or a red candle that's valid, and then you take it. So right here, we'll take this trade, enter on the open of the following candle. Like I mentioned earlier, set stop loss TP to 15,000 pips away. And then you can set TP1 to right there. So let me just get that. I'm just gonna mark it. It's not it's not important. I'm just gonna let this trade run, and then I'll mark it so you guys can see how it works. But I'll just mark it just in case. But you guys don't have to follow this exit strategy. This is just my recommendation. A lot of people don't even follow it because we usually hit full TP. But me myself, I've been trading for a long time, so I value risk management more than I value the whole trade. I'd rather take 750 pips than risk losing it all just to make the full move. But let's let it run here. All right, so we're in this trade. We've entered on the open of the following candle. So we're in this trade right now. If it hits stop loss, we hit stop loss. Hits TP, we hit TP. So we let that run. Okay, so right here, like I mentioned, if you're using my exit strategy, pretty much as price reaches 750 pips right here, what you do is you move your stop loss to this area right here, to TP1. So in that situation, if price was to pull back, you get stopped out right here. You're guaranteed 750 pips. Why would you get mad at that? Some people get mad at that, but I see that as a benefit because you didn't take a loss. And if you keep adding up these TP1s, no matter if they're, if they happen all the time, or if they never happen, and in this situation, you minimize your risk because you guarantee profits. And if you don't lose more than you win, then you're going to be in profit long term. So right here, if I took this position, which I didn't take today because the trend down was just too strong, I didn't want to go against it. And just because how the market's been moving lately, I would have gone out right here at 750 pips. But a lot of people held on to it. And if you held on to it, you can see here, full profit target right there. It actually rejected off the TP1 and then it shot up. So, there's 2 ways to take it. You can get out at TP1 if you move your stop loss to that area, or you can hang on to it for full TP. A lot of people in the chat trust my trades, so they just hold on to full TP. Me personally, I always exercise proper risk management, like every time. There's no time that I ever get greedy, because if you've been trading for long enough, you'll know that this game is a long-term game. It's not a get rich overnight game. It's a game that it's like consistent growth long term. But yeah, that's how the strategy works. I can show you the one from yesterday too. Let's see. So yesterday's was let me get that vertical line. Where's yesterday's? Yesterday was right over here. Actually, I think there was news yesterday, so we didn't take it. But I think if you took it, it still would have won. So yesterday was the Fed spoke. It was an FOMC conference, so that's why we didn't take that trade. But as you can see right here, just by looking at it, so we'll go back to here. Same situation, same requirements. Where'd that thing go? All right, cool. So right here, same requirements. We're going to look for entries after the New York Stock Exchange open, and then take the first valid K2 signal after the specific time. So right here, we're gonna let it run forward. Again, right there, we got a buy signal. So I'm just showing you guys that it still works even though there's news. But me personally, like I mentioned, I always exercise proper risk management, so I don't take over stuff like this. But some people do. It's really up to your risk tolerance if you want to take that risk or not. Me personally, I'm not here to get rich overnight. Like, I'm here to have long-term wealth. So if I could avoid a loss, I'll avoid a loss because I know our win rate's so high where I don't need to squeeze out every single win. So here we go. Set it up again. 1,500 pips. Let it run. There you go. Full profit. So as you can see right there, the strategy works very well. A lot of people have been using it for other sessions. It does work for other sessions, but it's not as accurate, guys. Like, let me see if I have. So I'm doing a spreadsheet right here where I'm back testing the strategy on the different sessions. This is the US session. This is the Asia session. This is the Europe session. I'm not done with it yet. So once I'm done with it, I'll release it to you guys so you guys can see. But as you can see here, there's a ton of greens, guys. So if it's green, that means it's a full TP. If it's red, it's a straight loss. If it's blue, that means that it hits half TP. So it hits like 750 pips, and then it reverses or something like that. And then right here, there's news. So you can see right here, if you just avoid news and don't trade during news, you could win a lot of trades. And that's just being careful. If you want to be risky, you could be risky, and you could get even more wins. But the thing with me is, you got to trade smart. You can't trade with emotion, because I know once you guys start seeing all these wins, you're gonna want to take every single trade, and that's what a lot of people have been doing. But some people get burnt. So that's strategy right there, Mike. Hope that helps. If you have any other questions regarding the strategy, feel free to let me know. But let me go back to your questions. So you said, just for your confirmation, how do you go about judging? So yeah, in your question you asked, how do I go about judging if it's a good or buy or sell? And I don't judge it at all because it's all based on the strategy. The strategy is pretty straightforward. There's no confusion there. It's not subjective, and that's why a lot of people like the K2 strategies more than any other strategy. Like, if you're trading price action, it's very subjective. One thing you see is different from what someone else sees. But for the K2 strategies, you can't not see this. Like, if you look for trades after 630, 630 is right there. There's no 631, 630, 649. 630 is right there. You can't fake the strategy. And then looking for the first valid signal, the signal is there. Once the signal appears, you can't take it off. So if you go and back test the strategy, you can go see how good the strategy is. Like, the win rate, you can find out yourself. Like, there's no way to lie about this. Like, I can't tell you that, oh, there was a buy here, and then I could go and change the settings where it's different. The signals come up and they don't disappear. So if you want to go and check the strategy yourself, feel free. That's what a lot of people have done, and it produces some amazing results. Let's see. So let me see if there's any other questions. Jasmine's asking, how do we add indicators to TradingView? So on TradingView, let me answer Khalid's question first. Khalid's asking, how do you get the 10-minute chart? So a lot of people don't know how to get this 10-minute chart on the TradingView. Basically what you do is you'll go right here. I know a lot of people don't have it right here, but what you'll do is you'll just click down here and you'll just add a 10, and then you'll add it if you want to do it this way. Another way to do it is you just click on the chart, you type in a 1 and a 0, and then it'll come up right there and you just hit enter. If you want to do an hour, 60, enter. There we go to the hour. If you want to go back to the 10-minute, 10, enter. And there you go. There's a 10-minute chart. So there goes that. Let's see. Kaylee's asking, can you use this daily strategy on other indices? So a lot of people have been asking that, and a lot of people have been using it. Me personally, I only trade US 30, so I've only tested US 30, but a lot of people have been using it on other indices as well, and it works well. So if you want to use it, you'd have to back test it yourself to see if it works or not. I'm sure it works most of the time, but I can't vouch and tell you guys that it does work because I've never tried it myself. So, I'm only going to give you guys advice and information on stuff that I actually know myself. I'm not going to just, tell you guys to take stuff for whatever reason. So, looking at S&P right here, if we're looking at the same strategy, we'll go to 630. Right here was 630. So same requirements. After 630, look for the first signal. Right here is a buy signal. It looks like it hit. So, and the thing is, I don't trade S&P, so I don't know what's a good pip risk or reward. So I'm just gonna leave it how it is right there. But obviously, it looks like it would have went straight to TP. Again, yesterday, let's see. Yesterday at 6 a.m. All right, so 6 a.m. was right over 6:30. 6:30 was right here. After 6:30, the first buy signal right here, we got a buy signal. Again, right there, another win. So it looks like it does work. Kaylee, I can't say that it does work because I haven't back tested it far enough. But if you do have the indicators, you can go ahead and back test it, and just go back to every 6:30 mark, and then run the strategy, and then you can see if it works. But I do recommend you go pretty far back. Like, don't just back test today and yesterday. Back test like a month, 2 months, 3 months. Go all the way back to January if you can, because you want to have enough data to know that the strategy actually works. A lot of people, they only test like 1 month, and that's not enough because the thing is, the market doesn't move the same all year round. If you guys are familiar with how the market moves in season. So, if you trade in the winter, you trade in the summer, you can tell that those are totally different markets. In the winter, the market moves a little faster, or no, so it moves a little irregular during the winter because of all the holidays. So we have Thanksgiving, we have Christmas. During those times, people aren't trading, so volatility is down. But if you trade during the fall, market's moving like crazy because everyone's in the market. You got the market makers, institutions, retail traders, everyone. Aside from that, right now in the summer, generally the market moves slow. You can see right here, it moves like a snail. But then we get these random movements when earnings come out. So earnings came out today, and it's they've been coming out recently, and that's why it's been moving like crazy. Also, we're living in a different time. It's it's COVID season. We never went through this before, so the market's moving way different than it did last summer. But generally during summer, the market just moves really slow. Like it didn't really move like how it does right now, and that's the only reason why we can catch these moves, because the K2 strategy is based on momentum. So if there's momentum in the market, then you can use this strategy on any asset. If you want to trade indices, this is my watch list here. So I trade these are all the Forex pairs I trade. You can trade gold, silver, indices, Bitcoin, crypto, anything you want. It works on everything, as long as there's volatility and momentum in the market. So let's see. One more question. Jasmine's asking, yeah, so back to your question, Jasmine, you're asking how we add indicators to TradingView. So in order to add the indicators on TradingView, you just click on indicators right here. And then if you have access to the K2 indicators, you just go to invite only scripts right here. And then you have all the K2 indicators right here. But you'll only see this if you have an active subscription to the K2 strategies. Yeah, these aren't public indicators, so a lot of people try to search them in the public search, but you're not going to find them. So if you go to the public library and you type in K2, you're going to find all these random indicators that aren't K2, and you'll see that they have locks next to them because they're not my these aren't my indicators. These are someone else's indicators, and they just have K2 in them. The only way to get the K2 indicators and have these green locks next to them, you'll have to have the invite only scripts. You're not going to be able to search them under public. Let's see. Chimezi's asking, for US daily, does the trend meter matter? No, Chimezi. So we don't use the trend meter on for the daily because it's just based on momentum. So the way that the strategy works is, the market, like you can see right here, price was trending down pre-market. So it's trending down from like yesterday until market open, and it continued down. So right here, price was trending down for like a long time. If you're trading in the direction of the trend, you would have missed this move right here because you wouldn't want to trade, against the trend. However, recently, just because of COVID and just the way the market's been moving, we've been using the K2 pivots as an extra confirmation, because we generally don't want to trade against the direction of the trend, but it's not part of the strategy. Normally the strategy we don't look at the trend at all, but because of how the market's been moving lately, you know, obviously the market's been moving irregular. We've been using the trend so that we could trade in the direction of the trend, and we could just sit out of the market when it's not trending in that direction. Like today. So today price was trending down way too heavy. That's why I didn't call this trade, because I don't like to call risky trades. You know, I'm more of a, you know, quality over quantity. So instead of giving out random signals that are super risky for you guys, I give you guys like hitters. Like I give you guys trades that will for sure hit. Trades that I'm taking myself. You know, they're just, I'm not just giving out signals just to give out signals. I'm giving out signals that I would take personally. But generally, you don't need the trend because we're trading with momentum for this strategy. And we're trying to get in and out of this trade within, you know, hour, 2 hours max. It's not like Forex where we're holding it for a couple hours. It's more so a short-term trade. But if you want to be extra careful, then yeah, you can use the trend. You know, you can only trade in the direction of the trend, but it's not necessarily required. Like today, if you weren't trading with the trend today, you would have made this TP right here. But you know, me personally, I only go. I like to go in the direction of the trend, even though it's not. You know, it's not in the requirements, and that's just me being extra careful. All right, let me go to the next question. Michael's asking, how do you get the K2 indicators? TradingView shows them locked for you. Yeah, Michael. So if you want the K2 indicators, you have to have an active subscription to K2. So if you want to sign up to K2, let me get the link. So you just go to the website. Right here, k2trades.com. So if you go on our website, k2trades.com, you can, if you just want access to the signals, you just click on, you know, K2 premium signals right here. If you want access to the strategy and the indicators, you click on the K2 trading course right here. And then right now we have the trial going on. So if you want to sign up for the trial, you can scroll down to the bottom. And then right here, it's 50 bucks for the first month, and then it'll go up to the normal rate after. Unless you want to do, you know, the annual rate. So this is where you can sign up for the trial, and then after that, you know, this is what you'll get here. You'll get access to the K2 video courses, the K2 indicators, the momentum indicator, trend meter, support resistance indicator, and the K2 pivots indicator. I haven't added that on here yet, but that's included as well. You know, plus you'll get access to all of the K2 premium groups. So this will be where you'll get access to the K2 indicators. You're not going to be able to find them on TradingView without an active subscription, and that's why you have the lock on your account, because you don't have access to them yet. Yeah, let me see. All right, so let me keep going down to the questions. Angel's asking, what are the K2 indicators? So I'll go over that in a little bit. Angel, we have a couple other questions here. I'm just gonna answer these questions first, and then I'll get back to your question. So before I get to your question, Amrit, I saw that you have a question about gold. I'm gonna answer James' question real quick. Sorry, James, I called you Jess. Yeah, I'm gonna answer James' question because it has to do with what we're looking at currently. And James is asking, can you explain the difference for people between the daily signal and weight signal? I've seen a lot of people asking about this lately. So the difference with my signal is that I'm using the daily K2 US 30 strategy. This is the only strategy that I use, or, you know, sometimes I'll use the K2 pivot strategy. But if I'm using that strategy, I'll let you guys know. It'll be labeled in the signal. So I'm just gonna go over that strategy real quick too, so that you guys can see, because those are the two main strategies that I use for US 30. Mostly it's gonna be the daily strategy, which I just showed you guys, which is super simple, but the K2 pivot strategy is also very simple. So let me just, I'll just run through that real quick. And I'll get to your question, Amrit. I'm not ignoring you. I'll get to you in a little bit. I'm just going over this because we already have this open. So this is gonna be the K2 pivot strategy. And this is really simple too. So first, you want to identify the trend using the K2 pivots indicator. Next, you want to identify a retracement and rejection of K2 pivot zone area, and then lastly confirm valid K2 signal, and then lastly enter on open of following candle. So I'm just going to change this color so you guys can see it's different. So it's super simple, guys. So first, you want to identify the trend. In order to identify the trend, you want to make sure that the K2 pivots, that price is below the K2 pivots, like I mentioned earlier, and the K2 pivots are both angling, they're all angling the same direction, and that they're spread out like they are right here. So right here, it's pretty clear and obvious that you know, the K2 pivots are angling down and then they're spread out. So right here, we can verify that this is a trend downward. So, you know, it's clear here. I could show you an example here. You know, when price is above it, it's trending up. When price is below all of them and they're spread out, it's trending down. It's real simple, guys. So right here, it's trending down, trending up, trending down, right? So first, we've identified the trend. So it's trending down right here. Next, you want to identify a retracement and rejection off the K2 pivot area. So right here, you can see price came down, retraced up right here, and then it rejected off the K2 pivot area right here. What I mean by the K2 pivot zone area is pretty much any area within the K2 pivots. They don't have to reject directly off the pivot, or you know, like directly off, like right here, it's rejecting right off it. It can pretty much reject like anywhere. So you can see right here, price rejected right here, but it's not on a pivot. It's just in this zoned area. So as you can see right here, so number one, we identified the trend was heading down. Next, you want to identify a retracement and rejection. So price came down, retraced right here, rejected right here. So that's requirement number two. So requirement number one and number two have been met. Lastly, you want to confirm a valid K2 signal. Like I mentioned earlier, a signal is valid if it's a sell signal with a red bearish candle. A signal is valid in the opposite direction if it's a buy signal or it's green with a green bullish candle. So as you can see right here, we have a red sell candle with a red bearish, we have a red sell signal with a red bearish candle. So this would be a valid sell signal right here. So if you, looking back at the requirements, we've identified the trend, price is trending down. We identified a retracement and rejection off the K2 pivot zone, which is right here. Price came down, retraced, rejected, came back down. And then we confirmed a valid K2 signal. Right here is a valid K2 signal. Lastly, we're going to enter on the open of the following candle. So if you entered right here, clear winner, straight to TP for like 1,200 pips. Again, right here, same thing. Identify the trend. Right here, it's trending down, obviously, right? So we have the trend downwards. Identify a retracement and rejection of the K2 pivot zone area. Right here, price came down. It retraced right here. Rejection right here. You see that nice upper wick. Price came up, established a top, and then it came back down. So right there, first two requirements met again. Lastly, confirm a valid K2 signal. Right here, we have a valid sell signal because it's a red valid. It's a red sell signal with a bearish, red bearish candle right here. So this would be a valid sell signal. Same thing we did over here. Enter on the open of the following candle. So again, right here, enter right there. There you go, guys. Another win. Another win for another 1,200 pips. Same thing again right here, guys. You want to do it again? I mean, you guys could do this all day and just, you know, stack up the profits. So again, right here, same situation. Identify the trend. It's still trending down, right? Identify the retracement and rejection right here. So it's kind of hard to see because we have this on, so I'll just delete this. Right here, price came down, retraced up this way, rejected right here, right? Nice wick, rejection off the K2 pivot, and then it came back down. So I'll put this back up. We have those first two requirements met. Confirm a valid K2 signal right here. Enter on the close of the candle. Right there, guys, another 1,200 pips. So within, how long was this? So within 8 hours, you would have had 3 wins back to back to back for 1,200 pips. So if you do 1,200 times 3, you do that. If you were trading, what were you trading? You were trading like a mini lot, you would have made 3,600 bucks in 8 hours. You know, not bad. Just scalping this using the same strategy. But yeah, okay, so now that you guys know that strategy, these are the two strategies that I use when I make my calls. So if you see a call from me, so let me go to the Telegram. So if you guys see a call from me, let me search it up. So right here. So here's a entry for me. So I say, you know, daily US session K2 sell stop entry. That would be the daily strategy. That's one that I call. You know, if there's another one here for pivots, you know, I'll put there K2 US 30 pivots buy limit. So that would be uh using the other strategy, the pivot strategy. So right there we hit TP. You know, we literally hit TP all the time right here. So this was the same strategy that I went over. Here's a signal. Right here, we hit TP1 for 750 pips. Again, right here, we hit full TP for 1500 pips. You know, we do this stuff all day, guys. It's real easy. But yeah, so this is pretty much whenever I make a call, these are the strategies that I use. And these strategies are available to you guys. So let me see if I could see if I can pull it up for you guys. I'll just show you guys the course real quick so that if you guys sign up, you guys will know where to look, and it's real simple. Let's go to the course real quick. All right, so if you guys have access to the K2 course, this is what the course looks like. And pretty much if you want to learn those two strategies, it's right here. So this is where the course starts. You just scroll down. And then you go right here to the K2 pivot strategy. That's the strategy that I just explained. You can scalp, intraday, or swing, you know, whatever you guys like to do. It's up to you. And then the K2 daily US 30 trading strategy. So both of the strategies are explained right here. They're in detail, they're in videos. So if you guys want to see, you know, how to do it, you just click on that. And then you got the video explanation that will load up right here. Same situation with the daily strategy. If you want to learn the daily strategy, click on that. And then you got the video right here. And you guys can learn how to trade exactly how I do. So if you guys want to be a profitable, you know, consistently profitable trader, just learn the strategies because we have the results to back up the strategy. So if you guys want to do that, you know, you guys are more than welcome. The difference with Wade's strategy is that he trades differently. He trades with like based off fundamentals. He also trades off, you know, some technicals. His strategy is very subjective. It's different. It's kind of harder to learn because you have to actually know how to trade. You can't just follow rules. Like for me, I give you guys rules where it's just straight up. It's like, all right, if these requirements don't meet, then don't take the trade because there's no trade there. The thing with Wade's trades is that he uses, so let me see, I'll pull up one of his right here. See, he uses fundamentals, and then he uses a lot of different things. Like he'll use the full moon, the half moon. If you guys aren't familiar with that, it's an old strategy that works. I don't use it, but I've looked at it. It does work. But it's not something that I like to trade because I don't like trading subjectively. I like to trade and know what's going to happen next. Like I like to trade very objectively and, you know, follow strict requirements. So this is one of Wade's signals. You can see here that I mean, honestly, I don't know what he drew. He drew like some trend lines here. So he has some technicals here. He also followed the news. So he knew that earnings were being released. And then he used order blocks here for supply and demand. So he uses a lot of different types of strategies and he merges them into one. And that's pretty much like the main difference between, you know, like my strategy and his, because he uses a bunch of different ones and you kind of have to know how to trade and you guys have to know, you know, what he's looking at to understand how he's trading. But for me, it's straight up like you look at the chart. If the entry's there, take it. If it's not, it's not. But with him, he'll incorporate news, he'll incorporate technicals, he'll incorporate fundamentals. There's a lot of things that he checks off before he takes any trade. So it's kind of hard for me to explain how he trades. You know, you'd have to go on a one-on-one with him so he can break it down for you. But me personally, that's just too complicated for me because it's going to be hard for me to teach you guys how to trade like how I do because there's no visualization there. So you can see right here, you know, if you just look at this, I don't know if you guys can see what he's looking at, but I know in his head, he can see, you know, the direction of the price. He knows where price is going. And that's how I trade too. Like normally there'd be no indicators here. So you guys can't see what I see without my indicators. And that's what makes K2 different from, you know, any other trading company or any other trading strategy. Because the thing is, like just looking at the chart, I can see it. I can see like what Wade's looking at because he can see what's going on here. I can see what's going on here. but using the indicators that I created, you guys can see what I see. This is what's going on in my head. And that's what makes it a little different. But yeah, that's pretty much the main difference between our strategies. My strategy is a concrete, requirement-based strategy. It's like a checkoff list. But for Wade's strategies, they're a little different. He has a lot more experience trading indices, so he knows how they move. And there's just a lot of different things that he looks at. So if you guys want to trade like Wade, you guys would have to, do his mentorship. But me personally, I can't really explain how he trades because even myself, I don't know how he trades. He uses so many different things. This is the moon phase that he's talking about. So this is one of the things that he uses. Basically, when you get a half moon, which is what he's looking at. So right here, when this turns, this is a half moon. Yeah, so when this is a half moon, this means that price is going down. So he'll take like sells whenever it's a half moon. If you do a full moon, like right here, it's like, yeah, right here. So you get a full moon, then you take buys. So that's what he talks about the moon phases. This is a really old strategy. It's like kind of based off the lunar moons, or I mean, maybe not the lunar moons, but it's based off like some type of horoscope type thing, where you can see right here, it kind of does work. So you can see right here, it doesn't work every time, but it does work a lot of times. So you can see right here, basically when it's a half moon, you take sells. If it's a full moon, you take a buy. So when he sees a full moon, he'll take some buys. He'll call buys like long holds. He'll tell you guys to buy and hang on to it, even though it's going like super south. I think this is what happened like yesterday. He said to sell, I think. Yeah, he said to sell and it was going up and we were winning our trades and everyone was tripping out because price is going the opposite direction. But the thing with these phases is that you have to hang on. So right here, there's a moon, right? Technically here you would take a sell, but price was going up. So he was waiting for price to go the opposite direction before he took that sell. And then he made this huge win right here. Similar to, how this moves over here. It's different. But yeah, like CT just said right now, price action is not easy. It's going to take you years and years to learn. So if you want to take a shortcut and, learn how to trade how I trade by looking at what I look at, you can just learn the K2 strategies. But if, price action is a good thing to know, but you're not going to learn it overnight. You're probably not going to learn it within a year. Even myself, I trade price action too, but I still don't know what I'm doing sometimes. And that's why I stick to my own strategy and I don't veer off because I know that my strategy works. But yeah, guys, so let me keep going down the questions. I hope that answers, the difference between my strategy and Wade's strategy and, and CT strategy too. Like CT trades price action too. Like he's well versed in like so many different strategies. For myself, I trade trend continuation with momentum. So basically the way that the K2 strategy works is you trade in the direction of trend and then you catch momentum as it swings up. So it's like how the pivot strategy works right here. Momentum is swinging down and the trend is going down. You wait for like a little pullback. So it pulls back right here and then you catch it as it comes back down. Same thing right here. Momentum's down, retracement, catch it as it comes back down. Again, right here, momentum's down, retracement, catch it as it comes back down. It's real simple, guys. Like there's no real need to overcomplicate it. But if you have more knowledge like Wade or CT, then you guys can use that. But just take it with a grain of salt that you're not going to learn that right away. I'm sure Wade and CT have been trading for a long time. Like myself, I've been trading for nearly 10 years now. But I haven't taken this seriously for the first 5 years. I didn't take trading seriously and I didn't really start learning really well until the past 5 years. And then the past 3 years, that's when I took it super seriously. And that's when I became very profitable. But yeah, guys, so let me keep going down the questions. I think Amrit's still here. Yeah, sorry, Amrit. We've been going on this for a long time. But let me go to Amrit wants me to look over gold. Amrit's Aaron at? Aaron, you didn't help him out?
Shawn, don't start. No, he's doing pretty good, bro. He already doubled his account within the first 2 days. He's doing pretty good.
Yeah, no, I saw your account, Amrit. You're doing really good. Props to you, man. Because Amrit's been around for a while. I know Amrit's had a lot of ups and downs.
OG, bro. Hey, but he had bought gold, and I think gold is gonna create a new high over the weekend. You think so?
So see, the thing with gold is, me personally, I don't like trading when it's too high like that, because the thing is, when it's overextended like this gives opportunity for, you know, institutions and market makers to manipulate the market. Because the thing is, they're not going to make it easy for you to you know, profit off this,
Mhm.
because they're gonna sucker you into these trades, and then they're gonna stop you out. Like right here, you know, a lot of people were buying because they thought this was unstoppable. So if you rewind right here,
That was me.
that was Aaron right there. See Aaron Blue's account right here.
Shawn, don't
Oh
start.
man. But yeah, look at this. Check this out, guys. So see, a normal trader, if you're not familiar with trading and you don't, I mean, Aaron knows that he knows how to trade. He just wasn't thinking.
I just
so,
need the
so
bigger lot size. I'm not gonna lie. I tried to pass the
yeah,
FTMO on one trade.
yeah. See, Aaron was just not thinking. Like, what you guys can't like FOMO into this. Like this, once this has happened, you guys missed out on the move already. Like, I wouldn't hop into this. But a lot of people hopped into this trade, and look what happened next, guys. Boom. So many people got fucked right here. Like, this is a lot of pips, guys. Like, whoever bought right here, you know, this drop like was like 300 pips, I guess. If you're trading gold, I don't trade gold anymore, so I'm not familiar with it. But I'm
See,
assuming this is 300 pips.
you're on 300 pips, yeah.
Yeah, so this is 300 pips, guys. If you guys took gold and you lost on this is a big loss. I know a lot of people blew their accounts, or, you know, slippage happened. I'm sure slippage happened. If you're trading on Hugo's Way or any like unregulated broker, you lost your account if you took a buy right here, because odds are price probably went through slippage, and then they didn't care and they let your account go to zero because they were trading against you. Um, but yeah, so Amrit was talking about to analyze this. So, you know, analyzing this right here, this would have been a pivot entry, like I mentioned earlier. And this would be a pivot entry because we waited for price to pull up, and then it retraced right here, rejected off the K2 pivots, and then it shot back up. Then we got a buy signal right here for an entry. But me personally, I wouldn't take the buy, even though it's a clear buy, because just how price has been moving, you know, supply and demand, like this is gold, it's not Forex. Supply and demand exists with, you know, certain assets that are in demand, like gold, oil, you know, indexes, stuff like that. The thing with Forex is a lot of people try to trade supply and demand with Forex, but it's completely different. Forex doesn't move like futures or stocks, indexes, stuff like that. So the thing with this is, you know, this is way overbought already. Just looking at it, it's been shooting up like crazy, and it actually looks like it's going into a consolidation phase right here. So if you look at it closely, it looks like it's consolidating right here. You know, I don't trade gold, so I can't really say exactly, you know, how it's moving, because I just don't trade gold anymore. So I'm not familiar with how it moves anymore. And especially during COVID, it's a highly manipulated asset, because, you know, if the economy is shitty, people are gonna buy gold. That's why it came up right here. Um, but you know, if you've been following K2 for a while and you've been attending, you know, our live calls, fundamentals kind of went out the window during COVID. Like literally, you would expect gold to just go straight up, and then you can see right here, gold went down. Um, you know, I can't explain why it went down and shit went up, because the economy is like so bad right now. Um, but but yeah, so right here it looks like it's in some consolidation. So Emma, if you're looking to enter this trade, I mean, obviously it would have a buy bias. It looks like, you know, it's going to reject off, and then we still have, you know, this is still a valid entry for a K2 pivots entry. Um, but like I said, me personally, I wouldn't take it, because I don't like taking uncertain trades like this. Like I want to know where my risk is at. The thing is with this is the market makers and institutions aren't going to make it easy where you can just profit and just buy and hold. They're going to spike price down like to wherever all the stop losses are. So say if you were trading this like a normal person, you're trading this like a normal person, everyone is going to put their stop losses like at the previous swing, right? Like somewhere around here. They probably wouldn't put it all the way down here because this is way too far off. But, you know, just looking at what price is right here, this would probably be considered the previous swing. So I'll just color this a different color. So this would be people's stop loss right here. Just move stop loss around this area. So, you know, what could happen here is the market makers and institutions know that this is where everyone's stop loss is, if that's where it's at. And what they could do is they'll just spike price down, stop it. That's probably what happened right here. They spike price down, stop everybody out, and then shoot it up. And that's why I don't like trading stuff like this, because I want to be low key about things. I don't want to trade when there's crazy stuff going on in the market, because that's how you get caught in these crazy movements. So Amrit, if you're looking to enter this trade, I mean, obviously I would recommend entering a buy, but if I was going to give you a better recommendation, I would just say not to trade it, because there's a lot of uncertainty. Obviously it's probably going to go up, but you can't say for certain. It could go down as far as to this pivot, or even this pivot, before it shoots up. And I don't think your account can handle this big of a drop. This is like, so the next pivot, it's like 264 pips from the last pivot down here. That's like let's see, a 530 pip drop, and you're gonna have to eat that loss until you you can recover. So me personally, I wouldn't trade it, but if you do want to trade it, obviously, I'd recommend to buy, because we still have a valid entry here for a K2 pivot entry. But also the problem with this is that even though this is a valid entry, it looks like it would have hit TP1. So generally, the way that I do it is like I mentioned earlier, these aren't actual targets. These are just points of area to remind you to move your stop loss. So if I divide that by 211. So this would be TP1. That'd be TP1, and then divide that again by 2. 105, I'll just round it because it's just too much work to actually set it up. So if you look at this right here, it looks like it would have hit half profit already, TP1, and then it came back down. So in that situation, if you're using the exit strategy, as price reached TP1, you would have moved your stop loss to that point. So you technically would have been out of this trade already. So like I said, man, this is just too risky. I wouldn't take this trade, although it does look like it's coming up. So if you're thinking about taking this trade, or if you're already in this trade, then if you're in a buy, I would just hang on to it. But as it moves in profit, just move your stop loss and profit with it. Just slide your stop loss with it. So say if you had say if your stop loss was down here, as price moves up in profit, just trail it, so that if price was to come down, it would stop you out in profit, and then you wouldn't be risking any losses in case it does reverse on you. But yeah, that's pretty much all I got to say about gold. I personally wouldn't trade it right now. It's too risky. Eve's saying, what broker do you use that is regulated? I use Forex.com. So Forex.com is the only broker that I recommend people use for Forex and gold. For indices, I don't really have one that I recommend. I use Hugo's Way, even though it's not a good broker, but I only use it with a small account. And then I used FTMO's LMAX as the broker. LMAX is an institutional broker, so that'd be good if you're not in the US, but they don't accept US clients. So it's kind of difficult to find a good indices broker that's in the US that doesn't require a big amount of money. Because if you're trading with a regulated broker for indices, you're gonna need at least like 10,000 in your account to even open an account with whatever is a US regulated broker here. I think TradeStation's one of them, but they have like a high deposit. Eve's using Owanda. Eves, are you in the US? Because if you're international, I know Owanda offers indices to like Malaysian clients, but if you're in the US, you can't trade indices on Owanda, but you could trade Forex, and I think you could trade. I don't know if you could trade gold. Maybe I don't use them, but Owanda is a good broker. They're US regulated, so that your money can't go missing. And they can't like mess with your account. Like offshore brokers do. So let me see. Aaron, did you see someone posted in the chat earlier today about I'm trying to see who mentioned it. Someone was talking about how they were getting scammed by Hugo's Way. Like they would put in trades and then it wouldn't fill for like 5 minutes later.
The hell?
And then they would just end up with a loss.
Gold is moving right now.
Yeah, I mean, that problem with trading with when the market's moving like crazy, like how it is right now, because the execution times aren't going to be great, and then the offshore brokers will have an excuse. They'll tell you that, oh, market was moving too fast, we couldn't fill your order, no execution times were available, stuff like that. And that's why I don't trust offshore brokers. But yeah, if you're using Oanda, they're good for Forex, and I'm assuming gold if they allow it. But yeah, Eve said I'm using FX Choice right now for indices. So I heard FX Choice is all right too. If you're gonna trade indices with a small amount of money, like less than 10,000, then you're gonna have to go with the offshore broker, which is fine. Just make sure that thousand that you're using on the offshore broker is you don't mind losing it, because the thing is your account can get blown in like at any moment if you're hanging on to it. That's why for my Hugo's Way account, I only keep 1,000 in there. So when I go over 1,000 for the week, I'll withdraw it and I'll leave that 1,000. So if I lose that money, it's whatever, because I already took the risk trading with them. But me personally, like I wouldn't trade anything big. Like Haley said, I have Hugo's Way. Would you recommend a better broker? Yeah, me personally, I use Hugo's Way too, but only with my small account, because the options are limited for us in the US. Kaylee said, I have Hugo's Way. At times my account just freezes, then unfreezes. Either I've hit stop loss or I'm in the negative. Yeah, that happens to me too. One thing to keep in mind is to don't trade indices from 10 p.m. to midnight Pacific Daylight Savings Time. Because I noticed that during those times, that's when Hugo's Way starts to play around. That's when the servers go offline and then you can't exit trades and you just end up getting screwed and stuck in that trade. And then once you do get connection, you end up in the negative and you're like, damn, I should have just exited. But that's just something to keep in mind if you're trading with Hugo's. So if you're just trading the daily strategy that I was explaining earlier, this is fine because we're trading at 6:30 a.m. There's not really much problem during that time. But if you trade at night, that's when the real problems occur. Like, I'm not sure if it's an issue with their servers or if they're just messing with you, but that's been consistent for like the past year. So I'd be careful with that. But yeah, recommendations on better brokers would just be regulated brokers. So you'd probably have to go to like a big broker like TD Ameritrade or something. But like I mentioned, you're gonna have to make a big deposit to use them for their futures trading. But yeah, let me keep going through the questions. If you guys have any other questions, feel free to put them in the Q&A. But yeah, let me keep going. So yeah, answer Amber's question. Angel's asking, what time in Eastern should we trade this? I think Aaron, did you answer that question already?
You said what? For which one?
Angel was at. Oh no, actually, I think you answered something else. Yeah, Angel. So wait, is Angel even here? Yeah, Angel's not even here anymore. So, or if you're here, Angel, you might be anonymous. If you are here, Eastern time is just 3 hours ahead of ours. So we're trading at 6:30 a.m. You'll be trading at 9:30 a.m. CST time. Let me. I can look that up for you. See if I can find it. I usually just go to timezoneconverter.com. See, time zone. Yeah, Kaylee. So if you go to timezoneconverter.com, it's real simple. So right here, this is my local time, 6:39, and then your CST. So just type it in there, CST. CST. All right. I'm assuming you're on daylight savings time, right? So you're CST. Wait, did you mean CDT? Yeah, I'm not sure. Is your CDT? I'm assuming CDT because it's telling me that wait, the United States currently observes CDT, not CDT. I'm assuming you're CDT because you're in the US. So if you're CDT, you guys are 2 hours ahead. So instead of 6:30 a.m., it's going to be 8:30 a.m. for you. But I'm not 100% sure. You should probably check it on your own because I'm not sure if you're CDT or CST. But let's see. Yeah, so it should be 2 hours ahead of ours. So if we're trading 6:30, you'll be trading at 8:30. Yeah, let me keep going down the questions real quick. Yeah, it's New York session. So whenever the New York Stock Exchange opens on your side. Let's see. So Angel's asking, what are the K2 indicators? So I'll go over, let's see. Oh yeah, CT George did 2 hours, 7:30. Wait, 7:30. CT says 7:30. Okay, so I'm assuming it's 7:30. I'm confused, so you can probably message CT if you're still confused too. But me personally, I don't know. Let's keep going down the questions. So Angel's asking, what are the K2 indicators? So I'll just show you guys the indicators real quick for whoever's new here. So let's go to US 30. Right, so I'll show you guys the indicators one by one. It shouldn't take too long because they're pretty simple. So I already explained earlier. I explained earlier what the K2 momentum indicator does, which is the K2 proprietary. So if you look at the indicator list and you go to invite only scripts, it's going to be the K2 Trades proprietary trading system. So the vertical lines are momentum signals. So basically what they're doing is they're indicating the direction of momentum. So if you get a valid buy signal, then momentum's going to swing upwards. If you get a valid sell signal, momentum swinging downwards, and vice versa, swinging up. This would be an invalid signal because it's a sell signal, but with a green bullish candle. So you can see right here, we got a sell signal, but it just went the opposite direction. And that's why, we wouldn't take these trades because they're invalid. But that's pretty much what this indicator does. The next indicator that I mentioned earlier is the K2 trend meter down here. So like I mentioned earlier, the trend meter basically gives you the overall trend on 4 different time frames. You can change these time frames to, if you're scalping, you can change it to the 1 minute, 3 minute, 5 minute. If you're trading intraday, you can trade it to the 30 minute, 40 minute, 1 hour, 2 hour, like I have right here. Or if you're swing trading, you can change it to like the daily, weekly, and monthly. And pretty much what this does is this gives you the overall trend on the chart for you. So instead of, using different indicators to determine what the overall trend is, you can just look at the trend meter right here. And if it's green, this is going to indicate prices trending upwards. If it's blue, this means price is in consolidation or it's indecisive. It's green right here, it pushed up. It's green right here, it pushed up. It's red right here, it came down. And this gives you, an easy understanding as to the direction of trend from a bird's eye view, so you don't have to go and, draw any trend lines, even though you can. So you can draw trend lines if you want here. But instead of drawing this trend line, you just look at the trend meter down here, and it's green. So it makes it a lot easier. It saves you time, especially if you're trading a lot of pairs like I do. It just makes things a whole lot easier. Our next indicator is going to be the K2SR indicator. So if you guys are familiar with this or aren't, basically what the K2SR indicator does is, let's replay price over here. What it does is it automatically, so this is the V2. I'll show you the V1 first. The V1 will automatically plot the strongest support resistance on the chart for you. So as you can see right here, we have a red line. That's the resistance. Right here is the support. And as price moves, it automatically plots for you. So you can see it moves with it. As price moves, the support resistance moves. And like I mentioned earlier, this just makes things a whole lot easier and helps you be a more efficient trader. So you don't have to go and draw support resistance on the chart for you. It's already drawn for you as price moves along. So this is the version 1. Now I'm going to show you guys the version 2. The version 2 is going to be the K2SR V2. And instead of having just the support and resistance on the chart for you, what this does is this draws zones on the chart for you, indicating where price is likely to, reverse or reject from. So as you can see right here, price comes from this zone, comes down, establishes a low right here, comes up, rejects off this zone, comes down, rejects off this zone, comes up, rejects off this zone, comes down, rejects off the same exact zone. So this kind of helps you understand where not to trade. So if you're taking a sell right here, you want to get out of the sell before it reaches the zone right here, because odds are it's going to shoot back up. And again, right here, shot up and rejected off the same exact zone. So instead of having to draw, boxes over these, you already have them set up. and you can see exactly where price rejects from. So if you have this is going to give you a huge upper hand when getting out of a trade, because a lot of people don't know when to get out of a trade. But if you have access to this indicator, you can see exactly where price is going to reject from. So if price reaches this area, you want to move your stop loss, somewhere right here, so that if it swings up, you get stopped out in profit. Or you can just trade in that direction. So if you're familiar with the K2 zone trading strategy, pretty much you can just trade in the direction of the trend. So if price rejects off this zone right here, you see a sell, you can take a sell right here, and then you can write it down for like 3,000 pips or even more if you want to write it all the way to the bottom for like 6,000 pips. Again, right here, rejected, you got a buy signal. You can take a buy right here, and then you could get out before it reaches this resistance right here. And similar to the original K2SR indicator, this also automatically plots as price moves. So as you can see right here, price is moving, and then you'll see new zones be created as price moves along. So as you can see right there, and you can see right here, it respects these zones perfectly. So you can literally trade within zone to zone, and that's how we trade, and that's how it makes trading so much easier because you know exactly where price is going to be bouncing around from. So that's the K2SR indicator. Lastly, we have the K2 pivots indicator. Like I mentioned earlier, this was used for the K2 pivot strategy. And this helps you identify where price is trending and also where price is likely to reject from. So as you can see right here, price usually follows along with the K2 pivots, and then it rejects off the zones. So it comes up, rejects, comes up, rejects, comes down, rejects. And that's why they're pivots, because price usually pivots as it gets near one of the pivot areas. And all these indicators are meant to be used together. So if you're using the pivots, use it with the momentum indicator, so that if you see a rejection of the pivot, you get a buy signal in the direction of the trend, you just take that buy, and it's an easy win for you. So like right here, you take this buy. You could have locked in about 8,000 pips right there. Price was going down right here. You could have taken a sell right here. You locked in like 20,000 pips. I mean, it's hard to believe, but it works. You can back test it. You can see if it works. Obviously price isn't trending here. You wouldn't take those trades. Price is trending here. You take a buy for another 5,000 pips. And it's real simple, guys. So that's pretty much, all of the K2 indicators. If you have access to the K2 indicators, you can see the power of how it works and how you can be a profitable trader just trading these strategies. And it's not very difficult. Literally, if you can follow rules, then you can be a profitable trader. Let's see. So we have another question from Angel. He's asking is that like the alligator? I'm not familiar with the alligator, but I know someone discussed it before. It looks like it, but it's not exactly the same. So Williams alligator. So I'll add this to the chart. Okay, so right here, this is the K2, right? This is the K2 pivots. I'll take off the K2 pivots and we'll add the alligator. The alligator doesn't act as pivots. It basically shows you where price is going, but you don't see price go and test the pivot. So if you take this off, so we add the K2 pivots again right here, take off the alligator, that they're completely different indicators. They look the same, but they're not the same at all because, I mean, honestly, I don't even know what I'm looking at just by looking at just looking at them. They look like a trend indicator. I don't know if you're supposed to determine entries off them, but I don't know because I don't trade the alligator and I've never really looked at it. I mean, if you're looking at it trend wise, yeah, they look very similar because they're moving in the same direction. But I mean, I don't know how would I determine a strategy just by looking at that because they look a little different to me. Oh, Aaron, are you familiar with it?
Nope.
Yeah, I'm not. So, I mean, you can probably ask in the chat. I know there's a few people in there that understand the alligator strategy, but I don't have any idea how it works. I don't even know what they're based on. Let's see.
I mean, does it require like trend lines or indicators, or what does it require?
I don't know. It's just these lines that are going down. There's only 3 of them, so I'm not familiar with how they work. But I mean, yeah, they look kind of similar, but I don't think they work exactly the same. So yeah, I'm gonna take that off because I can't explain it because I don't even know what it is. TCC said look in the settings. So let's go to alligator. Yeah, it has the jaw length. I mean, I guess it's supposed to resemble an alligator, but fib ratios. Oh yeah, I mean CT's a fib guy. I'm not a fib guy, so I wouldn't know. But yeah, I guess so. So if you match this with the, I mean that's what CT is saying about the K2 pivots indicator too, that they're like similar to the fib ratios. But I don't trade fib, so I don't know what it would be based on. Um, but yeah, I mean, yeah, if CT says they're fib ratios, and I'm sure he's right. I just personally don't. I don't know. Yeah, CT said I don't use it, but I see it. That's what I was thinking too, because it kind of looks like a K2 pivots indicator, but it doesn't look exactly the same. I don't know. I remember, I think Marcus in here? No, he's not. So Marcus mentioned before that you're supposed to enter it whenever the alligator's teeth cross or something, or the jaw crosses. So just looking at the numbers here, yeah, the jaw and the teeth. So I guess whenever certain things cross, you're supposed to take an entry. So I guess when the green crosses the blue, you take an entry. This is just me just looking at it because I'm not familiar with it, so I don't know. But yeah, it looks like if they spread out in that direction, you take a buy. Uh, but I mean, it doesn't look very accurate. So right here, you would have taken this buy, and then you would have taken the sell, but you would have lost. Taking this buy, you probably would have won. Yeah, I don't use it. So if you guys are familiar with it, I mean, feel free to use it if you guys are good with it. But me personally, I can't really explain it. So yeah, let me close that. See what else we got here. We got a bunch of questions from Angel. All right, we got 3 more questions left. So if you guys have any other questions, feel free to put them in the Q&A. You know, because I don't really have much to go over unless you guys have questions. Unless we go over like the trades from today. But if you look at all the signals that we sent out, they're pretty self-explanatory. They're all using the same strategy and stuff like that. CT said fibs good for mathematicians, bad for traders. I agree because I'm not good at math at all. So there's no way that I could decipher that. I don't know. Aaron over here might be a mathematician, trading mathematician, bro.
I love math.
Sorry. All right, so Angel's asking, what's the best time frame to verify the strategy? You can use, well, yeah, I don't think Angel's here anymore, but you can use the K2 strategies on any time frame. You know, they're based on momentum. So if there's momentum in the market, you can trade it on literally any time frame. So this is the 4-hour. You know, there's clear wins right here. A buy. I mean a sell. Another sell right there. Another sell right there. I mean, it's kind of too easy. I feel like I should be trading this too. So that's the 4-hour. If you want to trade on the daily, same thing, guys. Like right here. You know, straight winners. Again, right here. And this is a strategy that I've been using for a long time. I just never released it to you guys until recently because I just figured I might as well share with you guys. I mean, it's not really a huge secret if you could. I mean, I guess it's a secret if you don't understand how to create your own strategies, but it wasn't really difficult for me to figure out. But yeah, I mean, the strategy works on the daily right here. Let's go on the lower time frames. And this is all the strategies. It's not just this strategy, because the K2 strategies are all based on the same thing. They're all based on trend and momentum. So literally we'll have an entry using the pivot strategy, and it'll be the same exact entry when using the intraday strategy. That they're all aligned in like one way or another. Here's the 1-hour. Same thing right here. Price came down, came up, rejection, sell signal. Looks like it would have hit, but like way down here. Another win. Again, right here, another win. Yeah, those are the higher time frames. Again, right here on the 10 minute, another win. 30 minute, another one right here, another win. I mean, you can literally apply this on anything. The 1 minute right here, was that another win? Could have went the other direction. Another win right there. I mean, the possibilities are literally endless if you actually put in the work to learn and apply the strategies. It's not something that you learn overnight. Okay, let's see. One more question from Angel asking me, do you do calls? Do you call these in the free chat? Yeah. So if you guys are new here, this is the free public chat. I do call the trades in here as well, but they're delayed. So they'll go to the premium first, and then they'll be sent here sometimes. They're not sent here 100% of the time because obviously if we hit TP already, I'm not going to share it with you guys because it's way too late. But if it's still active like this right here, I'll share it with you guys, and then I'll have the results there as well. Okay, so Angel said, so the full moon on Monday. So will this be likely? Like I mentioned earlier, Angel, I don't trade that. You should probably ask Wade because Wade really likes to trade that. So, if you want to learn about the moon phases, you can ask Wade. I'm sure he could help you. But me personally, I don't trade it, so I can't really, give you my opinion on it because I'm not familiar with it at all. I just looked at the obvious. So if you zoom out of this, so if I turn off everything and then you zoom out of it, it's kind of obvious the direction that it moves in. So if you get a new moon, it's a buy. If you get I don't know what it's, a full moon, you sell. But it doesn't always work. So right here we have a full moon, and if you took a buy, you would have gone screwed. Right here, if you took a sell off the full moon, or yeah, full moon, you would have gone screwed as well. It really depends on how you decipher it. And I know that Wade doesn't. This isn't the only thing that he looks at. This is just an extra confirmation that he uses as well. But yeah, so this is the moon phase. So yeah, guys, it looks like we don't have any other questions. So if you guys have any other questions, I mean, feel free to ask right now. Otherwise, I'll be available in the Telegram chat. I have a lot of questions that I have to get through, so I'll probably get through that. I'll probably get to your question if you have anything, in a few hours or so. But I just have like a long list of questions to get through on here. So once I'm done with that, I could get to your guys' questions if you guys have anything extra. Aisha is asking, I'm with LQDFX. I can't open indice trades with a 125. I heard with FX Choice, you only need $50 to trade US 30. I wouldn't recommend trading US 30 with anything under 1,000. If you don't have enough money to trade, you just don't have enough money to trade it. Save up some money and trade US 30. The problem with you trading with a small account like that is that you're going to get margin called out. So, if you take any of our daily entries, like the 10 minute, our stop loss is 1,500 pips. So if you're trading a $50 account, there's no way you could survive that. You'll get margin called out immediately. So let's see. This was our entry right here. And price, you can see right here that there was drawdown. If you can't survive that drawdown, you're going to get stopped out, and you're just going to lose your account. You're going to blow the account right away. Indices isn't a cheap asset to trade. Technically, you need at least 1,000, and that's the bare minimum. Like, you shouldn't trade indices with anything under that. I mean, I know a lot of people get excited when they see us making these huge profits trading indices, but indices isn't something to play around with. It's not. It's not like Forex where you can trade pennies. When you're trading US 30, you're trading like dollars. Like each movement, you'll be up and down a few dollars. And if you're trading with that small of an account, you're just gambling. Because right here, you can see price came down, and it came down about 767 pips. So the thing is, if your account is super small, you could probably only survive this much of a pullback. So if this pulls back right here, it would stop you out, and then it'd go straight to profit. You'd be so upset that you missed all this profit because you got stopped out right here. You have to be able to survive this drawdown. And so if you're trading this on Hugo's way, the smallest lot size, which is a 0.01, in order to survive this, you need at least $500, $600 because this entire loss would be $150 on the smallest account. I mean, yeah, on the smallest lot size. So if you're trading a $50 account, you could probably only survive like this much right here. So right here, as it retraces down, you'd have lost your entire account. Your account would go to zero, and then you would have missed out on all this profit right here. And this is why I recommend that you have enough money in your account to survive, this drawdown right here. So if you want to trade indices, then I recommend you just save a little more money, like save at least 1,000. The thing is, you're not risking the whole 1,000. The only thing that you need that money for is to survive this drawdown. Because just looking at the trades here, this one and then the other one over here, won too. Like, the win rate is pretty high. So the thing is, you just need to be able to survive, these moves so you don't get margin called out. And that's the main thing. You're not going to be risking the whole 1,000 unless you don't put a stop loss. And we always tell you to put a stop loss. So, as long as you use proper risk management, you should be fine. But, like I said, you need to have at least a decent amount in the account. If you're in the premium, ask the other members. I know a lot of people have been using CoinEx, I think, and they've been trading it with a smaller amount because they trade like nano pips. They don't even trade the micro pips. So you could trade with even a smaller amount, or it's just pennies. But most brokers don't allow that. I know CSUK's here. So CSUK uses LQDFX. I'm not sure if you can trade. Oh, never mind. Okay, so I think Honest does. So if you can go to the K² price action group, I think he uses a LQDFX. So he might be able to answer your question. But me personally, I've heard of that broker, and that broker is not good, so I wouldn't recommend using them. I heard MyFX Choice is okay, but I don't know about trading with $50. That's like you're literally like on the line of a margin call at like $50. So just ask in the chat. Like, you just pop a question in the chat, and someone will help you out. The public chat's a little harder for you to get help because people there aren't exactly serious with their trading. But if you're in the premium, everyone there is serious with their trading. Everyone's paying to be there. Everyone's paying there to learn and to become better traders. So if you're in the premium, you'll get a lot more help there versus you being in the public chat, because everyone in the public chat is looking for, free information, but no one there is serious about anything. They'll mess around with you. No one's gonna answer your question. So if you can join the premium, I recommend it. But you can try asking your question in the chat, and then I'll ask people in the premium if they can answer your question. But most people don't interact in the free chat because you want to be trading with people that are like-minded. You want to be trading with people that want to level up and be good at trading and being serious about their money, not just gambling basically. But yeah, just pop that question in the chat, and then we'll try to help you out there, or I'll try to find some help for you. But yeah, guys, that was it for the questions. I don't know if anyone else has any other questions here. But if you guys are new here, feel free to be here for the next live session. I do this every Tuesday and Thursday at 5 p.m. And we usually end around 7 p.m. Right now it's 7. But if you guys have a lot of questions, I'll stay on until we answer all the questions. I'm not going to cut it short just because we run out of questions. But in this situation, we have no questions, so I'm going to be cutting out at our normal time. We've been on this for about 2 hours now. So yeah, guys, if you guys have any questions, feel free to reach out on Telegram. Otherwise, I'll be available, in any other social media outlet. If you guys want to reach out to me on Instagram, email, Facebook, whatever, I'll be available. But yeah, guys, thanks for showing up. I'll see you guys in the chat.